The end is near, or is it? Let's talk stocks potentially being overvalued and what my take is on this. The reason I'm making this video is twofold. Primarily, I've seen a lot of creators recently touching on the, I think, probably cyclical topic is a fair thing to call it, which is whether stocks are undervalued or overvalued. I don't think we'll ever get to a point where this isn't one of the key sort of discussion topics in the investing community. And I think with social media now and TikTok and all of this, I think that is sort of exacerbated that people immediately jump to things being incredibly cheap or incredibly overpriced very quickly. And I think that cycle is just getting ever and ever faster. I think as the market does sort of seemingly become more volatile. But what I've also seen that made me really want to make this video is in the YouTube Studio app, it gives you top searches for people that watch your content. And whether you can see this or not, the current top search is, or the second most searched term for my viewers, or for all of you guys, is overvalued and undervalued stocks. So I thought, let's address that question. So currently, the S&P 500's average forward PE is 29.7, which does put it above the historical average, and the Nasdaq and some of these other major indexes are in a similar case. And what we're having people do is saying that where we are now is very similar to the dot-com bubble. And we're seeing indicators trigger that have not triggered since either then or the 2008 financial crisis. And everyone is saying, you know, we need to at least be very wary of a financial crisis. I think this is also a good time to say this is not financial advice, and do your own research. I think the overvalued sort of argument is also an easy case to make because of the AI boom that has happened, is happening, where what we're seeing is a lot of, companies able to just use the word AI and immediately inflate their stock price. And there's still dubious links really to how much this will long-term increase profitability of these companies. It's all well and good at existing, but how do we really capitalize and monetize this? I think though, potentially some of the arguments saying that we are about to have a crash are potentially a little bit oversimplified, though I do agree that, as always, we should be, wary of the risks of that. And I think it's better really that people are over prudent than over cautious. I think especially in times like this, with there being some similarities in terms of the sort of technical analysis to, I think especially the dot-com bubble is the major comparison people make, just because of how much tech and AI is really the major growth. You look at the Mag 7 and some of these other things. But we are really in a different time. There's been a lot of change since the early 2000s, especially with the way people can invest, sort of access to capital, buying fractional shares, a lot of things like this that do have an impact on the way that stock markets perform. I think the major topic I wanted to touch on today is the amount of free capital, or the amount of money that is in money market funds or QMMFs, which is something that really does link into Trading 212, as me, like a lot of you, will be users of the Trading 212 cash, invested returns on non-invested capital, which is at the moment, I think 4.05% on GBP, and whatever other currencies. There's lots of people that use it on this platform. I think Interactive Investor, a couple of other platforms do very, very similar things, let alone all the capital in banks. The QMMFs, there are some charts that show this, but the growth in the amount of cash in them is absolutely astronomical. And we are at massive highs in terms of the overall growth up till now. And I think what that shows is there are a lot of people that are waiting for a market downturn. There's lots of people that are aware of investments enough to know that QMMFs exist. Obviously, they may be, some of these large capital balances may be managed by external companies or like Vanguard or other things that are why there's cash in there, but it means we have a large user base of people that are aware of investments enough to know that QMMFs exist. And for those people, I would also assume that that they are aware or do somehow track the stock market. They're aware what the S&P 500 is. They are aware of how the stock market works and some of its benefits and drawbacks versus holding cash. So what that suggests is that there are a lot of people that are waiting for a downturn because they've got their money in these ETFs. I am one of these people. When we have that next market downturn, we'll look to invest at slightly cheaper levels into the stock market. This amount of cash available is very bullish generally for the stock market, and I think this will be something that we may see carry forward, where higher PEs, higher PEGs, the price earnings growth ratios, potentially could become normalized, and we may just potentially reevaluate what a high or a low PE actually is. Because at the moment we are seeing a lot of stocks at high PEs, but we're not seeing really too much reduction in appetite for the bulls for this to go even higher. And I think really what that comes down to is a lot of what this shows in terms of people having their money in QMMFs, having free cash. And I think really as soon as we see even a minor drop, my expectation really based on this data would be that the bulls will come in and push it back up. So I just think over time, what that will materialize in is a higher average PE over the long run, because we've never been in this scenario before where there's so much capital waiting on the sidelines. So I'd like to hear your guys' opinions on this take. As I say, do your own research. This is just something that I think is a change in the market, and that maybe makes now not directly comparable to the way the market was in the year 2000, things like that. But it's always interesting to get people's takes on some of the market flows and the setup of things at the moment and what that may mean going forward. And it's always interesting to have these conversations and work out what other people are thinking. Really, this is about the market as a whole. This is not about a single stock or a single sector. It's just a generalization. But yeah, let's get these comments going in the comment section down below, and also like and subscribe if you want to see more content like this in future. But anyway, it's been Harry from HTL Tech, or HTL Finance even. I'll see you next time.